To understand financial markets, look at this screen as a crime scene. Every price movement leaves behind physical evidence. Major banks and hedge funds move billions of dollars through these markets every single day. Because they move so much capital at once, it is physically impossible for them to hide their tracks. This means you don't need to predict the future to be a successful trader. You only need to know how to hunt for the specific footprints these massive institutions leave behind on your chart. Think of this institutional footprint as a rocket launch pad. This base is exactly where the big banks build and fuel their massive trades before sending the price soaring. Identifying this pad allows you to move right alongside the smart money instead of being crushed by their momentum. The first step in this strategy is proving a rocket actually launched. On this chart, you can see the price line blasting upward and shattering right through the ceiling we call the previous high. In the trading world, we call this a break of structure. That break is your confirmation. Individual traders like us, what the pros call retail, simply do not have the billions of dollars required to push a market that high, that fast. When you look at the sheer distance covered here, you are seeing institutional money stepping in with real intent. But we aren't going to buy while the price is already high. Instead, drop your eyes back down to the ground. We need to find the exact origin of that massive move. This chart zooms in on that origin point to show us the order block. See that single red downward candle sitting right before the sequence of massive green candles? That is the exact spot we are looking for. That specific downward candle represents the exact moment the institutions accumulated their massive positions. It is the literal concrete base of our launch pad. A real rocket leaves a heavy exhaust trail, and so does an institutional trade. This diagram here shows a simple 3-candle sequence on the chart. Notice the empty vertical space between the top of the first candle and the bottom of the third. We call this a fair value gap. That gap represents a literal vacuum in the price. The market shot up so fast that a huge chunk of orders were skipped over entirely. In financial markets, that empty space acts like a giant magnet, pulling the price back down to fill it. A common mistake for beginners is seeing that initial blast and trying to jump right into it midair. They end up missing the ride and taking a heavy loss. Smart traders stay grounded and wait patiently at the pad. Because the market moved so fast, those big banks still have unfilled orders sitting all the way at the bottom. The rocket almost always comes back down to the launch pad to refuel and scoop up the rest of that money. This chart shows exactly how to execute the trade. When the price retraces down into our highlighted order block, you place your buy entry right at the top edge of the box. Then you tuck your stop loss, your safety net, safely below the bottom edge. By waiting for the refuel, you get to piggyback on millions of dollars of institutional volume with incredibly precise timing. You might be wondering how to spot all of this without staring at a dozen different screens and messy indicators all day. We solved this by using a simple 2-time-frame rule. Look at this setup here. On the left, we use a 4-hour chart to determine the big picture. If the overall trend is clearly pointing up, we know our rocket is facing the right way, and we only look for opportunities to buy. Once you verify that 4-hour direction, you zoom into a 15-minute chart. That closer view is where you hunt for your specific launchpad and time your actual entry. Combining the big picture with a precise entry window filters out the daily market noise and aligns you with the real institutional flow. We have to be realistic here. No trading strategy is perfect, and sometimes rockets fail right on the launchpad. This diagram shows what happens when an order block fails to hold. The price falls straight down, hits your red stop-loss line, and triggers your escape pod. Your trade closes automatically, protecting your account. This leads us to a simple boundary. You never risk more than 1% of your total account balance on any single trade. When you only risk 1%, a failed launch is just a minor bump. You would have to lose 100 trades in a row to wipe out your account. It ensures you survive long enough to catch the next successful flight. Find the launch pad. Wait for the refuel. Be disciplined with your risk. Once you master this process, you graduate from guessing and start executing exactly like the smart money.